We're coming off kind of a mixed day Friday, but in general, a rally when it comes to the markets. Give us a sense. How do you see this final full trading week of the year? What is your WEX word of the day?
I think the final trading week is going to be positive. It's a market that is increasingly enthused about a soft landing. And if we continue to get reasonably resilient economic data and inflation pressure that continues to moderate, that is a good backdrop. So my word of the day is normalization. We are getting into a period of a more normalized policy environment after an incredibly tight one. And we're going to normalize the yield curve. And normalization of the yield curve historically has been quite good for risk assets.
So give us a sense. Does normalization, is that sort of kind of a synonym for broadening? Because we've seen a definite broadening in the market. We've seen, other parts of the market outside the Magnificent Seven that powered the market all year, up 75% year to date. But we've seen a lot of those other areas catch a bid.
Absolutely. And it's very similar to the trade that you saw from the middle of October of 2022 through February when Silicon Valley Bank failed. So it was a much broader market because the expectation was for a soft landing. Now, once the banks started to fail, and quite frankly, coincident with that was a period of hot economic data. So the concern was that the banks were under pressure and the Federal Reserve was going to have to keep raising rates. So that created a much more concentrated market.
Okay.
Since we've seen inflation down, more participation, as you mentioned.
All right, so more participation. You're looking actually at the small caps, the Russell 2000, currently trading at about 25 times forward earnings compared to the historical average of about 35 times forward earnings. So you're saying right now, is this an attractive entry point for the small caps?
It is. And, valuations are not timing tools. So valuations in small cap and value and international have been cheap for a while, but you need a catalyst. And that catalyst is coming in the form of expectations of Fed rate cuts. And that is the steepening of the yield curve. That steepening of the yield curve historically has been quite good for smaller cap indices.
And you're also looking outside of the U.S., for example, the MSCI U.S. trading right at its historical average, but the MSCI minus the U.S. at a bit of a discount?
Yeah, the all-country world index is also cheap, the developed and the emerging world compared to the U.S. And again, we haven't had a catalyst for a while, but what that catalyst is emerging is the end of Fed policy tightening. And typically the end of tightening leads to a weaker dollar.